Investing into dividends can be an excellent way to build wealth over time and potentially retire early, which is a lot of young investors' goal. Dividend investing involves buying a stock that pays regular dividends to shareholders, which are a portion of the company's earnings. These dividends can be reinvested to purchase additional shares of a stock, leading to a compound effect, which then can purchase more dividend stocks, which then purchase more dividend stocks, which in due time turn into a snowball of cash and assets. In this video, we're going to go through some of the ways that you can invest into dividend stocks and or ETFs and retire early, and how some different strategies can look. If there's a conversation going on about retiring early and living off of dividends, it's likely that JP Morgan's Equity Premium Income ETF will probably be in the conversation also. But if you're not already aware, JP is a type of exchange traded fund or ETF offered by JP Morgan, which this fund is really designed to provide investors with access to diversified stocks throughout US equities while generating consistent income through an options overlay strategy. So this fund doesn't only invest into high quality, large cap US stocks, but also uses options to generate income. The underlying portfolio of JP consists of selections of stocks from the S&P 500 index, which includes some of the largest and most well-known companies in the world. However, what makes JP unique is its options strategy overlay, which involves selling covered calls of options on a portion of the underlying stocks in the portfolio. A covered call option are the type of option contracts that give the buyer the right to purchase a specific stock at a predetermined price, known as a strike price, before a certain date, known as what they call it, the expiration date. By selling covered calls, JP generates income in the form of option premiums, which can be used to supplement the fund's dividend income. So if you're at all familiar with selling covered calls or selling options, this is part of what this fund does. In addition to the awesome strategy, JP does have a trailing 12-month dividend yield of around 11.86%. It is also a monthly paying dividend fund, so you can guarantee that every single month you are going to be getting that nice juicy dividend from JP. One thing that's also very promising when it comes to JP is the total return. Over the last 5 years, JP has a 39.65% total return, next to the S&P's 57.63% of total return for the last 5 years. Now you guys might be saying, well, why wouldn't you just invest in the S&P 500? Why would you invest in a fund that gets you less of a total return? Well, there's lots of ways you can look at this. If you're investing into something like JP, you're not necessarily as concerned about the total return. You're more concerned about planting your money in a safe asset that has relatively low volatility, and you know that you're going to be getting paid that juicy dividend every single month. So although there are many different ways to use dividend stocks to retire early, JP is one of the most popular ways, with a AUM, assets under management, of 21 billion just about. This is a very popular fund. On the other side of things, a lot of investors that are looking to retire early off of dividends would look at a fund like SCHD. If you're involved in dividends at all, you know exactly which fund I'm talking about. It's a Schwab Strategic Trust ETF. Now, unlike JP, Schwab's ETF SCHD only yields around 3.41% for the trailing 12 months, but it does have some massive dividend growth. Over the last 10 years, this fund has grown exponentially. And that's one thing you're not going to find when you invest into a fund like JP. You're not going to see as consistent, as reliable dividend growth over time. In fact, SCHD has a 5-year growth rate of 13.74%, which is astounding. Investors that want to retire early off of dividends are going to have to ask themselves, how much money do I have to play with here? If you don't have as much money, for example, you're not going to be able to generate as high of dividend income from something like SCHD compared to JP. But that doesn't necessarily mean that SCHD is worse than JP or vice versa. Every single stock and every single ETF have different things to offer. And what's most important is that you build a strategy, and in my opinion, a diversified strategy that has a little bit of everything. Now, the way that I've been able to build my now over 7-figure portfolio, and keep in mind this portfolio right here on the screen is just one of my portfolios, is by investing into multiple different stocks and ETFs. Now, over time, I've built certain positions out which I'm more fond of, like for example, QYield, Verizon, JP, Realty Income, and Devo. Just to name a few, those positions I own probably around $50,000 each in throughout my various portfolios. But over time, to get to a point to where now I can actually live off of the dividend income from my various portfolios, I've found that it's all about diversification. You will see over time that certain stocks, certain ETFs are going to cut their dividends, unfortunately, and certain ETFs and stocks are going to raise their dividends to amounts that you'll be very satisfied with. But again, diversification is key here. Having different stocks in different industries and having a well-rounded portfolio is most likely the way to go. So when it's all said and done, in order to maximize the benefits of dividend investing, it's important that you do research on high-quality dividend-paying stocks and ETFs that have a track record of performance and that match your strategy. It is also important to have a long-term strategy. If you listen to some of the greats like Warren Buffett and other great investors, a lot of principles always come back to the same place. Being consistent and having a lot of time in the market and letting the power of compounding do its thing, you'll most likely have a very, very good outcome in the end. If you enjoyed this video and want to see more videos like this, make sure to please drop a like in the video and subscribe for more, and I'll see you guys in the next one.